It's common knowledge that Tesla stock is quite volatile. The stock is suddenly back in the positives, about $1,000, after a steep and short upward climb. Will Tesla skyrocket soon? Prior to its recent climb back up, it was a rough ride indeed. The drop came after Tesla reported better than expected Q4 2021 earnings and maintained its guidance for 50% plus growth in 2022, so the decline was being fueled by other factors. Will the stock of Tesla, which has dropped about 21% in the previous months, then risen, begin to fall once more? Or will it continue to rise? Let's find out. Experts say the recent drop in Tesla stock this year was largely caused by a broader sell-off in high-growth, high-multiple firms as investors prepare for tighter monetary policy and higher interest rates this year. And we're inclined to believe them because when it comes to the foundation, nothing has changed much for Tesla. According to past performance, Tesla stock has a good chance of rising in the coming month. As history would have it, in the last 10 years, Tesla stock had seen a 21-day drop of 21% or more on 71 occasions, with 65 of these resulting in Tesla stock increasing over the following one-month period. This historical trend indicates that Tesla stock has a 65 out of 71 chance of rising in the coming months, signaling that Tesla stock is a decent choice in the near term. The stock is currently back in the red, but still solidly about $1,000, signaling a drop from levels seen in March. This brings us to the question, what causes a stock to rise or fall? Several experts say the key factor seems to be market sentiment. As market sentiment seems to be driven by bullish or bearish catalysts, it's our belief that Tesla stock will skyrocket soon. How so? Well, Tesla has been throwing bullish catalysts around like free candy. Firstly, Tesla is laying the framework for a new stock split, which will be approved by shareholders at the company's annual meeting later this year. Tesla announced this increase in the number of authorized shares of common stock to permit a stock split in a regulatory filing, and this isn't the first time this is happening. In August 2020, the electric vehicle manufacturer completed a 5-for-1 stock split. Since then, the stock has more than doubled in value, and while stock splits do not affect the company's valuation or underlying operation, they can, nevertheless, be an indication of management's confidence. This previous increase in the stock's value was primarily due to the business exceeding, not the stock split, and Tesla doesn't seem to be slowing down. In 2021, Tesla delivered about 1 million vehicles, nearly doubling the previous year's total. With demand still strong and Tesla adding new plants in Texas and Germany this year, it's feasible that by the end of 2022, Tesla will be producing 2 million vehicles per year, and sales will continue to rise. Customers are also eagerly anticipating this increased output. Given Tesla's head start in electric vehicle production in the United States, it's no wonder that its models accounted for 4 of the top 5 best-selling electric vehicles in 2020. In 2021 alone, the company's total revenue surpassed $50 billion, and it earned nearly $5.5 billion in net income. It's also not difficult to see how the corporation made that profit. In the last 3 years, Tesla has steadily increased its gross margin, and over the years, it will become even more profitable as it continues to expand and increase production. The combination of robust demand and Tesla's dominant market position should help the company's profitability continue to increase. Another factor to consider is that Tesla also has the ability to set its own prices. While many businesses are grappling with rising raw material and transportation costs, Tesla has already announced price increases in the United States and China. In fact, it has raised the prices of several vehicles twice in the last month. Whether or not the company receives approval to increase its share count, there's plenty of positive developments underway. While another stock split may boost shares in the near term, long-term results will be determined by the business itself. Tesla will take advantage of increased worldwide demand by ramping up production at its 2 new facilities. Tesla's Berlin plant, Giga Berlin, is set to produce 500 cars per week, with production anticipated to increase to 1,000 cars per week by the end of April. Until the new factory produces its own 4680 cells, Tesla China is expected to supply the Berlin plant with the entire 2170 battery packs. Daniel Ives, financial analyst at Wedbush Securities, commented on this development, saying, "We see Giga Berlin as a significant competitive advantage for Tesla in terms of expanding its supply footprint in this important region." The plant's launch coincided with Tesla's recent price hikes of 3% to 5% per unit in both the United States and China, undoubtedly making the stock price skyrocket. An increase of about 8% was recorded after these announcements were made. The Model 3, The company's most affordable electric vehicle is now $47,000, up from $45,000. Elon Musk tweeted on March 13th that the company was experiencing strong recent inflation pressure in raw materials and logistics, which is the case for several original equipment manufacturers. Tesla appears to provide investors with a steady stream of news. Tesla appears to be on a mission to develop as many gigafactories as possible to increase output and dominate the electric vehicle market, and has officially constructed a new gigafactory, which experts say was built out of necessity and will be able to meet Tesla's expected vehicle demand. The factory in Texas is an important step in improving manufacturing efficiency in order to meet the growing demand for electric vehicles. This will be the first factory outside of California to build Model Ys with the standard Range Plus option. The plant will be the Tesla Cybertruck and Tesla Semi's major production facility. It will also produce Model 3 and Model Y vehicles for the eastern United States. Tesla's corporate headquarters is also stationed there. The fact that Gigafactory Texas is Tesla's largest property to date, with plenty of potential for expansion, is one of the most intriguing features of this project. Does the Giga Texas sound like another bullish catalyst? Yes, that's because it is. For the time being, Tesla is suffering from the enviable problem of demand outstripping supply. And once productions begin in Austin, Texas and Berlin, Germany, its place in the automotive industry will be solidified even more. According to experts, Tesla's stock is still quite overvalued. We believe, however, that current trends indicate that Tesla's output will begin to justify its high valuation. Let's look at the numbers. Tesla delivered a record-breaking amount of automobiles of 308,600 last quarter in 2021, marking an increase of 87% year after year, compared to the estimated 267,000 deliveries to be made in the fourth quarter. In addition, Tesla announced a total of 936,000 vehicles delivered in 2021, compared to an estimate of 897,000. The business expects to deliver 1.3 million vehicles in 2022. Tesla should be able to handle this with ease, especially now that its gigafactories in Texas and Germany are operational. When talking about Tesla's stock, Elon Musk's influence can't be ignored. In a market dominated by high-risk assets like disruptive technological developments, investors are often ready to ignore fundamentals in favor of long-term potential. Elon Musk is one of the world's wealthiest people, and for better or for worse, his opinion has a significant impact on the markets. His tweets have been seen to cause an increase or decrease in Tesla's stock. Putting Elon Musk's meme potential aside and focusing on his genius, the market is anticipating Tesla's new goods this year. Musk's company's stock has been seen to rise when he makes any favorable news. Many investors have unwavering faith in him, and Tesla has undoubtedly flourished under his leadership. Unlike skeptics would have it, Tesla is still the most well-known electric vehicle manufacturer. Tesla is currently the leading manufacturer of electric vehicles across the world. The corporation has a 15% market share, with Volkswagen and General Motors following closely after. The electric vehicle industry was valued at $287 billion in 2021. According to third-party research agencies, this will increase to $1.3 trillion by 2028, with a compound annual growth rate of 24%. Due to its cutting-edge technology and high consumer loyalty, it seems Tesla will go on to be the most powerful player in this business. As a result, it will inevitably benefit from the expansion of the electric vehicle industry, leading to a positive market sentiment, which will inevitably cause the stock to skyrocket. Keep in mind that intense competition from other major electric vehicle players such as Lucid and Rivian could pose a threat to Tesla's rapid expansion. Do you think Tesla stock will soon skyrocket as well? Comment down below.